Hi there, it's Andrew Bell and great to be with you once again. Each month the Reserve Bank of Australia offers its perspective on how Australia's travelling. We all have our own opinions on Australia at present, and that is often off the back of how we're feeling in our own little pocket of Australia. Now the Reserve Bank's read is purely on the economic front, and it's interesting to look at their latest report. Of course, we do not operate independent of the rest of the world. So the view is that the global economic growth is slow and has been slow for quite some time. And then in many places actually is slowing. Fortunately for us, our major trading partners, in particular China and India, are generally outperforming the world. And that's a big plus for Australia. I think everyone is aware, separate to the Trump factor, that the US economy is actually picking up, which is reflected by the strong activity in Wall Street, more jobs and so on. In fact, I was in the US a couple of weeks ago and I was amazed by the significant increase in construction across all areas: housing, commercial and of course infrastructure. Two key factors around the world are that inflation is low and unemployment is falling in the three biggest economic regions, meaning overall the major economies are slowly improving. The Reserve Bank is fundamentally saying the world economy is behaving itself, and there's been lots of concerns in the past about a world recession. And our Reserve Bank says that this is now fading and that we simply have to come to terms with the fact that we are in a low growth, low inflationary economy, which is likely to remain with us for some time, despite most central banks having tried to stimulate their individual economies around the world by low interest rates. In general, it's just not working any longer. Looking at the Australian economy, our economy is now growing at a much slower pace than the long-run averages, and more in line with the lower growth environment that the rest of the world, and the developed world in particular, has experienced since the global financial crisis. However, the Reserve Bank says that we are performing better than most economies, with uninterrupted growth for over a quarter of a century. It reminds us that we are, like the rest of the world, in a low inflationary economy, which is one of the reasons why the Reserve Bank can keep official interest rates so low. They say the Australian household wealth is strong, and now after a period of slashing our cash rate following the GFC, we are spending a little more, and that's good for our economy. Despite concerns about rising household debt, particularly off the back of credit cards and borrowing for real estate, the Reserve Bank says that the Australian households are amongst the wealthiest in the world. And our assets are increasing in value faster than our liabilities. They're largely, of course, talking about real estate assets. They've also addressed the issue of household debt, saying that despite record high levels of household debt, falling interest rates mean the debt is more affordable than ever, with the average household debt as a percentage of disposable income being at an affordable level. The Reserve Bank, like ourselves, do know the risks associated with high debt when interest rates start to rise, and they've made some separate statements about this. The Reserve Bank goes on to say that currently we're creating jobs and that unemployment rate is holding steady and dropping, but they do acknowledge that part-time work and underemployment is a hidden risk in the economy. In summary, they are saying that all in all, our economy is sound and we're in a period of low economic growth with low inflation, low wages growth, low interest rates. Whilst it does not feel good, because there is nowhere near the spectacular growth that we remembered in the 1990s and the early 2000s, it is in fact how the rest of the world has been operating for some time now. There are still some risks. 1 quarter of negative economic growth that we had back in the September quarter reminded us that recession is the next step down from low growth, and we must always be careful not to move into that space. Hence the continued low interest rate environment. This certainly suggests the Reserve Bank is unlikely to increase interest rates for quite some time. But that has not stopped APRA making bank lending very challenging at present by tightening regulations across many fronts. The Reserve Bank report is not one that we would describe as an exciting report, but one that reminds us that whilst there is so much discussion about how unspectacular our economy is, we are actually doing better than most. Also, don't forget, we've got our upcoming ball. We're getting very close to being full house. So if you're looking to book, please do so. We'd love to have you there. You'll see the screen. Selena Carson's our ball coordinator. And also take this opportunity to thank those platinums who have also confirmed their tables to date, which of course is the Star Casino, Gold Coast Bulletin, Porsche, STO, Ramsden Lawyers, Wilshire Family Law and Home Court. Great to have you on board. It is going to be a spectacular night. Love to see you there. Well, that's it for this fortnight. Stay safe and I'll see you in 2 weeks' time.